For investors that are following Nvidia stock and are concerned about the long-term viability of Nvidia's revenues at these elevated levels, the management team at Nvidia answered a lot of questions and delivered a lot of insight as to why businesses are buying Nvidia's products. These developments and these insights could alleviate some concerns from Nvidia stock investors about the company's long-term prospects. So I thought these were very important for Nvidia stock investors to know about. Let me share these details with you here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Nvidia's management team gave one example of Meta Platforms and their cutting-edge Andromeda advertising engine, which runs on Nvidia's Grace Hopper superchip, serving vast quantities of ads across Instagram and Facebook applications. This technology helped boost inference throughput by 3x with enhanced ad personalization, which delivered a meaningful jump in monetization and return on investment. So let me share with you the details of what this means. The company Meta Platforms generates roughly all of its revenue from advertising. And its marketers, the people that are spending money on Instagram and Facebook to reach those billions of monthly active users that engage with those platforms, the reason they're spending money on Meta Platforms is because they want access to those customers, to those prospects who could become potential customers. What Meta Platforms is doing is utilizing NVIDIA's technology, increasing the speed of computation so that they can better deliver advertising for the marketers on the platform, which then enhances the return on investment, which then makes Meta Platforms a more attractive place for marketers to spend money. All of which adds and has a positive virtuous cycle because the customers experience a better product when they're seeing advertisements that are more relevant. If you see an advertisement for something that you're not interested in at all, it feels like an annoyance, an interruption. But if you see an advertisement for something that you're interested in, it's more of like oh, that's interesting. I didn't know that this company had this product, so I'm glad to see. And this is something I might look into a little bit later. Or in fact, you might actually click on that advertisement and go look at that promoted product, which then generates revenue for the company that introduced that product to you, which then reinforces their ability to advertise on Meta Platforms and creates that positive virtuous cycle. And what NVIDIA is saying here is that they boosted inference by 3x. So Meta Platforms is seeing such an improvement in their ability to serve advertisements and monetize engagement on the platform. And I've seen that, right? You've seen me cover Meta Platforms over these last few years, and I've been talking about with Meta how they continue to achieve phenomenal success, adding new users, increasing engagement, increasing revenue, while also increasing profits. It's because they're improving their capabilities in serving advertisements. They're getting better at doing this task specifically, and they're getting help from NVIDIA and NVIDIA's products because it helps the increasing speed, serving products, serving advertisements at lightning speed, making all those computations behind the scene to bring forth that one advertisement that's the most optimal advertisement to show you at that moment when you're browsing. So beyond Meta Platforms and the advertising segment, NVIDIA's achieving great success in the automotive segment as well. And this automotive segment is the thing I've been talking about with NVIDIA as potentially the next big thing for the company. Not this year, not next year, maybe 3 years from now, maybe 5 years from now, the automotive vertical could drive significant revenue increases for NVIDIA. So NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year, which would be a relatively small percentage of the company's overall revenue. The company is expected to generate over $120 billion in revenue in its current fiscal year. So at $5 billion, the automotive segment would be less than 5% of the company's total revenue. But what I was talking about 3 years from now, 5 years from now, it could be a more meaningful percentage of the company's overall revenue. It could be 10, 20, maybe even 40% of the company's overall revenue. At the Consumer Electronic Conference, Hyundai Motor Group announced that it's adopting Nvidia technologies to accelerate autonomous vehicles and robotics developments and smart factory initiatives. Nvidia is saying that breakthroughs in autonomous vehicle development will require 10 times more computing power than exists today. And of course, Nvidia is the company that's providing that computing power. So if we are to have driverless cars everywhere more broadly, Nvidia is going to play a significant role in the development of that technology because they have the best accelerated computing product on the market today. And it's very likely that 3 years from now, they will still have the best accelerated computing product, as the competition is at least 2 steps behind Nvidia right now. So I don't believe the competition will be able to catch up in the next 3 years. In the next 5 years, maybe I would say that probability is a little bit higher. But in the next 3 years, I don't think anyone will be able to close that gap in that short amount of time. So driverless car technology has several businesses like Hyundai, like Tesla, of course, that are investing to try and develop that technology. And as the investments in these data centers optimized for AI, as they kind of flatten out, let's say 3 years from now, I don't think they'll grow at the rate that they're growing today 3 years from now. I think 3 years from now, this surge in growth in building these data centers optimized for AI will slow down considerably. And then NVIDIA can count on replacement revenue from the businesses that built those data centers in 2023 that now in 2028 they probably need to be upgraded and replaced with the latest generation technology. So as they're getting that replacement revenue, they can also be getting this revenue from the automotive companies developing driverless car technology. And then if we have more broadly available autonomous vehicles, let's say 5 years from now, then that required computing power will then require more NVIDIA GPUs to power those autonomous vehicles. So if you're concerned that, NVIDIA is only going to experience this revenue surge over these next 2 years and then it's going to be over, it's going to be game over for NVIDIA, I don't think that's going to be the case. I think as the data centers optimized for AI, as that opportunity kind of reaches its peak 2, maybe 3, maybe 4 years from now, you'll have these new opportunities emerging, and one of them could be autonomous vehicles. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.